Now, ladies and gentlemen, we'll explore how investors, developers, and buyers are navigating a dynamic market to drive growth, innovation, and long-term stability. And for this discussion, please welcome to the stage James Allan, CEO of the Middle East and Africa at JLL, Hassan Abdelnabi, CEO of Beltone Mortgage, Wissam Nouhad Braidy, CEO of HRE Real Estate Development, Ali Musmar, CEO of the Aram Group UAE, and of course your moderator, Ramia Farrage, Senior Presenter at Forbes Middle East.
Thank you. Hello, how is everybody enjoying the summit? Have you been networking, socializing? Have you learned new things? Okay. Well, as you know, our real estate market is defined by rapid innovation, by shifting demand, and by, fortunately for many of you in the audience, record-breaking investment flows. So, James, with the UAE seeing record investment transactions in 2024, I checked and I saw that they came in at $243 billion. And if anybody wants to challenge that number, feel free to do so. Tell us how investor appetite is really evolving across asset classes, hospitality, residential, and office.
Sure. Firstly, I'm not going to challenge that number. And 2024 was a great year for transactional volumes in both residential and commercial real estate. If we just look at those three asset classes, residential continues to steal the headlines. A lot of noise around that. Most of the supply is in Dubai. And when you look at 2024, there was 170,000 transactions in that marketplace. Everyone was going to go, what's going to happen in 2025? Are we going to see a slowdown? Well, I can tell you in Q1 of this year, year on year, we saw a 30% increase in volumes, and the forecast is 220,000 transactions in the Dubai residential market. So still a very hot marketplace indeed. Now that is very much driven by owner-occupiers and also strong rental market, which obviously is very good for investor sentiment. So we've seen that continue to grow. If you look at hotels, now in hotels, traditionally there are very few assets that come on the market. A lot of the UAE government entities own them. No one wants to sell their trophy hotel. But we did see a couple of transactions last year. Nikki Beach and the Fairmont, sub-low 7% yields, which is good and very competitive. But moving forward, we don't really see many assets coming on the market for sale. Where we see the investor opportunity is looking at dated hotels. Is there a refurbishment opportunity that can drive investor returns? And so I think that's going to be an interesting space over the next 12 to 24 months for hotels. Moving on to office. Office again we had transactions in that market. You don't often see that in UAE. Again, government entities own a lot of the office stock, don't want to sell them. But we did see ICD Brookfield sold down 49%. We saw Building 3 in Emaar Square. We saw Aldar invest in T-Com acquisitions and also a full purchase of H&H office building in DIFC. Now that's all good for volumes. Moving forward, I think that's one of the biggest commercial opportunities still. Vacancy rates in Dubai are 1%, vacancy rates in Abu Dhabi 1%. In order for UAE full stop to have medium to long-term success across all those asset classes, we need professional migration to continue move to UAE. With that, you need offices. So I think that's a very interesting space to watch. And hopefully we see more private sector get into that space.
And I think there's no sign of any slowdown of professional migration into the UAE, judging just by the traffic. And in Q1 of last year and Q2, we saw hundreds of thousands of people enter Dubai alone. Would you like to add to that?
Well, I do agree with you on this, but yeah, definitely there is higher demand in real estate, especially residential. For us as a public listed entity, we look into resilient assets, which is a mixed use basically between commercial and residential. So we believe that the demand will continue to rise. If a slowdown can happen, it's only a slowdown and a rising slowdown. So we still believe, yeah, there is a potential market. Resilient assets will continue to maintain value in UAE. And yeah, definitely.
And where do you anticipate we will see the most demand?
Well, basically, Dubai is still leading the market. Abu Dhabi is picking up quickly as well afterwards. So this will continue in these two areas, I believe.
And Hassan, this brings us to mortgages. I mean, we need to pay for these properties. Tell us how innovative mortgage solutions can really help bridge the gap between a largely rental-based population and drive that towards long-term home ownership.
Well, actually, as we all see now, rising in the prices of properties make the rentals look much easier and affordable for home ownership. But this is for a very short time. Making mortgage now affordable and accessible for clients will for sure fill this gap. Because as we see now, there is lots of assets that's in the market, ready to be sold, but the problem is it's all in cash. So the mortgage comes here to fill in this gap and make it all in installments once again. Making the mortgage accessible, seamless, using the tech now, as like we back home in our company in Beltone Mortgage, we are the first to use the application, to use the website to apply for this mortgage loans, make it very accessible. Also making the time shorter for loan disbursement, like making it in 3 days like we did in Egypt, was a game changer in the market. Yeah, we do pay our loans in just 3 days, while banks and other companies do it in average like 60 days.
How are you able to expedite that process where you can deliver a mortgage within 3 days while banks are taking 2 months to do so?
Using tech. Tech is the key now. Applying on the application, having the full history for the client, credit history for him, even now the repayment, making it transparent for both the client and the company. This is the game.
And Wissam, you're really focused on the Dubai market, am I correct?
Yes.
So what are the major trends that are really influencing your development strategy in the very dynamic environment that we are seeing in Dubai currently?
Thank you, Ramia. It's a pleasure to be with you. But I need to go back to the first question you asked about the trend in Dubai and why people are coming and investing in UAE especially. If you go back to the history, we had two big major events in UAE, 2008 and COVID. And UAE earned the growth. After the challenge we had in 2008, we go back to the main code, which is it's not about your crisis, it's how you manage it. And by managing these crises, you own the future. What happened from 2008 till the COVID pandemic, UAE managed it in a different way. And when the pandemic hit, the management that UAE did during this period of time will give us 50 years of growth. Why? Because we owned it to the whole world. Everyone had eye on UAE, how managing the future and how managing the biggest crisis we had in our period, which is the pandemic. And that's why, going back to all the growth happening now and why people are coming from outside to invest in UAE, it's because of the leadership and how they manage every single crisis. So this is where you invest. This is where you trust you can put your money, because you can ensure that whatever is happening, you have the right management. This is a key and very important part, because it's not only about numbers in life, it's about emotions. Investors, yes, they invest with numbers, but what triggers them is emotions and the beliefs they look at it behind any project. In my vision for HRE and whatever I do in my career is, for me, numbers are very important. But the biggest question is why we are doing what we are doing. This is very important. So in a trend of business, you see ROI is very important. It's return on investment. But for me, it's the return of intention.
Oh, interesting.
which is very important in this world now. With the access of technology and AI, we are equal. No innovation anymore. Why? Because if you use the AI in the right way, you can get any other idea you needed. So the innovation is accessible for everyone. The technology is accessible to anyone. So the challenge in the future is being more human. It's not going back to the technology. The technology will surpass what we are living now today. But the challenge in the future is being more human. You need your partners or your clients not to buy your product, but you need them to believe in your product. You don't need your people who work with you to just be happy working. You need them to commit. And your project doesn't mean they need to succeed. You need to inspire through your project. This is the key in the future. It's not about innovation anymore. It's about connection. This is where we are going in the future. We need to go back to the real challenge is, from my perspective, is customer experience. You need to own your client and let them feel that this is the company we need to work with. This is the biggest challenge, especially with the new generation. They don't care about big brands. You can see them. They are willing to leave big brands and support a local brand with a purpose, with a mission, a brand who is making an impact. So this is what's coming in the future, and any company who wants to look into the future and look into the number, they need to start thinking about the purpose. Why we are doing what we are doing now.
Return on intention and being more human. That's so insightful. And the idea that younger people are not interested in brands anymore is absolutely spot on. People are spending more on experiences, and they are leaving the LV bags on the shelves, taking holidays to Thailand instead.
And Ramia, trust me, don't underestimate them.
Yes.
Yeah.
We had a lot of challenge through the past where businesses challenged new generation or new trends, and they failed.
Absolutely. Tell us about the trends that are really influencing your strategy right now.
Basically, to a large extent, I would agree with what you say. Customer relevance is important, but adding value for the customer is crucial as well. I mean, you're not only selling a real estate property, investment in property is something that should stand strong as a proof for a future investment for the families, for whoever, because emotions are connected to family as well. And you want to secure your family's future. You want to make sure that you're in contact with the customer. There is a relevance there. You understand his needs and requirements. And that's an essential part of doing future investments as well. As an investor, I would relate to the market more. I agree, brands are no longer the issue. Approaching the customer in a centric approach that touches its emotions, but that should add value to him as well. So, yeah.
And James, as more institutional grade assets like top-tier office buildings, like logistics hub, like luxury residential, as they enter the market and the yields drop, I'm assuming the yields are dropping, how is this region's landscape maturing in comparison to the global landscape?
Yeah, we have definitely seen yield compression across most asset classes, very much like mature markets. Where we're really lacking here is in terms of volumes for that true institutional performance measurements. But I think the real focus for this region has got to be on transparency. This is something we track at JLL globally. Over the last 2 years, we've had $1.2 trillion worth of direct investment into real estate. 80% of that went to the top 13 most transparent markets in the world, which is very telling.
Transparency is key.
Transparency
So
drives
how
dollar
do
investment.
the UAE and Saudi, for example, rate? I know JLL has a transparency index.
Yeah, we do. We track 89 global markets. 3 of those are in the Middle East. KSA, Abu Dhabi, and Dubai. KSA, and the last report, we do it every 2 years, the last report came out in 24. KSA was ranked 38, Abu Dhabi was ranked 41, and Dubai 28. I'd just like to say on Abu Dhabi's number of 41, They came out with a very good digital platform, unfortunately, after our research.
Okay, so that will be reflected next year.
I don't think that's a true reflection on where they actually stand. So I think we'll see them move up very quickly on the next report that comes out in 2026.
And out of curiosity, globally, who's number one?
Number one is it's UK, the top three, UK, USA, and France. So usual traditional mature markets.
Yes,
And also the top Asian market in there is Singapore, which is still not in the top 10. So it's traditional European markets that really drive this.
But these GCC countries that you mentioned, they have moved up the ranks over the past...
Yeah, the top 5 performers in terms of accelerating up the index were KSA, UAE, Dubai, India number 1. So no surprises, it's the growth markets.
Yeah.
And of course, with growth markets, there comes much more digitalization, there comes more transparency, more transactions, and again, sustainability is playing a big part in this as well, because that's something we track. And obviously that gives more information about the building and more transparency.
Yes, likewise. Hassan, tell us about the government policies or the new financial technologies that are really most effective in helping more people buy homes and doing so without increasing financial risk for lenders.
Well, actually now I can see that the fractional ownership is one of the, or will be one of the game changers in the market now. It allows new investors to come, younger investors, having a lower entry cost also for it. So I think fractional ownership will be a game changer for the coming 5 years.
Wissam, what are your thoughts on fractional ownership?
It's a new era. I believe in the past, we challenged the internet. And then we challenged the smartphones. And then we challenged Bitcoin. And now a lot are challenging this trend. But definitely this is the future. Why? Because the investment is more approachable. It's more accessible for everyone. Now the investment is based on people who has high saving or they can afford to have a mortgage. But in the future, whatever you have as a saving or small income, you can just invest it in an opportunity you think about it. This is the way the world will be perceived, not only in real estate, in everything. Because it came as a trend before, when, if you remember, during COVID and before COVID, it came as an NFT, where people, they had this digital asset. Small digital asset, but it's connected to something physical, to utility. So the development after this, we are losing the NFT trend, but we are going more into diversified and more appealing technology, where you can have your digital asset connected to any utility you have it or any other assets you have it. This evolvement with years will take us to different challenges. Yani, do you think we're going to have the next year a flying taxi in Dubai?
Yes. By the end of this year, we should have flying taxis in Dubai.
People were challenging 2 years, 3 years back. People were challenging no way to have this.
I embraced the internet and the smartphone and Bitcoin. I embraced all three.
And my advice, stop challenging what is coming.
Yes.
Just embrace it, just follow it, and try to be the first to adopt it.
Absolutely, yeah.
Yes.
Ali, what are your thoughts on fractional ownership?
Basically, the concept is there earlier. I mean, the government has supported the REITs, the real estate investment trusts. So it's there in a way or another. It's an additional justification of it, an additional regulation to it. But yeah, it's something happening and it will continue to happen. And yes, it will allow smaller investors at the retail aspect to invest in properties as well. It will support the real estate industry in general. But yeah, it's there in the REITs, real estate trust funds, and it will have a more regulated approach to of ownership.
And it does need more regulation, doesn't it? I mean, James, I'm sure you can find some part of fractional ownership that isn't as glorious as we're making it seem.
Yeah, I think it'd be fair to say I'm not as bullish as my peers on the stage on fractional ownership, and I'll give a couple of reasons why. I think fractional ownership is really a last resort for borrowing. You've probably gone through the traditional banking, whether it's credit placing, to get there, and then you've ended up with, well, the only option is fractional ownership. So I think if you get to that place, you've got to be looking at the quality of the asset or the development. Second piece for me is I just think it's a solution waiting for a problem. What do I mean by that? Well, what if there's a leak in the roof? Who's paying for that? Are you giving everyone a haircut or discount on their yield? Where's that conversation in this? And if you're an investor, you've got options. Well, do you just go to the bond market? Sounds like a safer bet. You know, what return are you getting for that risk? And I don't think that's really being talked about. Or are you going to go to the stock market and invest into a blue chip company and get a very stable yield there? So, look, I know it's here. I know there's a lot of noise about it, but I think people need to go in with their eyes wide open in terms of what those risks are behind that.
Mm-hmm. I'd like to know from Wissam and Ali how you're leveraging innovation, whether it's tech or design or finance, to really build buyer trust and to differentiate your projects in what is a very highly competitive environment.
Basically, it's crucial to understand capital deployment, how much money you're willing to invest as an investor, I'm talking, or a developer, how much money you're willing to invest in, if I may say, PropTech, or the technological intelligence of the real estate. Where does it add value most for the end user, let's say, if I'm an investor as an end user for our investments, or a residential or a tenant or an end user as well. The good thing about this country is the market is now picking up to an extent where you can actually assess the risk for capital deployment. And you can approach the market in a more innovative, not a traditional financing ways. You can select, for example, carefully joint ventures with technological or advanced AI providers that can add value to your end users as well. And basically, it's looking at the rethinking your value creation. What adds value in the future for you as an investor, and what adds value for the end user of the investment that you have, or you're selling to your end users. So it's a balance between how much you're willing to invest in PropTech versus having enough, keeping an eye, riding the wave of the real estate, and making sure that you remain agile for the investments that comes ahead as well. Mm-hmm. So balance of both, probably.
And Wissam, how are you differentiating your projects in the competitive environment we're in right now?
I need to go back to my the first discussion we had. It's not through technology, it's not through innovation, it's not through all the traditional tools we are using. Even, I told you, finance is very important, numbers are very important, and in today's world, whatever you are offering to your client as a tools, it's not your own USP anymore, because in 2025 to compete in a market like UAE, you need to, this is the main tools you need to give it. If you are talking about quality, you cannot have a business without quality. If you are talking about delivery, you cannot have a business without delivery. You need to commit for whatever you are doing. The biggest challenge and the biggest trust you can build with these people is through connection, through communication. And through what is exactly your purpose behind whatever you are doing. Because giving them as a return on investment, it's a must. No one will invest in your business if there is no potential for growth or profit. But the differentiation is building the trust through communication and connection.
And I believe we're running short on time, but if we consider this real estate market to really have the three characteristics of rapid innovation, of rising costs, of shifting demand, how can we build greater buyer and investor confidence? James mentioned transparency, but surely there has to be more.
Transparency is the major point, definitely. Consistency and efficiency can have. You see, customer trust is cultivated. It doesn't come as a one-time. You need to keep building it. Creating your transparency is the first point. I do agree 100%. Relevance to the customer requirements and needs is important. Hearing the voice of customer, getting emotionally in touch with your customers and understanding their needs is important as well. And consistency. You need to keep consistent and approaching, especially with the dynamic changes in such industry as well. Catering for the customer needs and different changes that happens in their needs as well. You need to be sensitive towards their requirements. I do trust the technology and the AI in looking at trends of the market changes as well. We previously heard them having a real sound approach in the artificial intelligence way. And I do agree with it as well. It can give you a hand. Emotions are required, but again, you cannot depend on someone's sensitivity towards understanding the connections and emotions. You need to have the data required for that. You need to analyze it well and take a diligent decision about it.
Exactly. Ali Sajwani was saying there's a delicate balance between employing AI and employing humans, and the humans absolutely cannot be replaced.
Yep.
James.
I mean, for me, obviously, we've talked about transparency. I think the other one is we need the financial landscape to become more mature. And I'd say in particular for construction financing. Right now, it's still not that competitive when compared to mature markets. And it is improving for traditional lenders, i.e. the banks, and then we're starting to see some credit placing institutions coming into the market. But we really need that to become a competitive space in order to attract private investors to do speculative development, who traditionally then hold those and then sell them. That will then drive volumes, and that's what we need to become a real mature market and benchmark ourselves up against those, the mature markets of the Londons, the New Yorks, and the Paris.
Mm-hmm. Hassan, how can we build greater buyer and investor confidence?
As Wissam also said, I think the product or the real estate industry we're talking about, and home ownership especially, is not an easy decision. So working closely with our clients to give them a tailored, personalized experience they deserve will be the great point.
Mm-hmm. Wissam.
I will go back into connection and communication again. But what I mean exactly about it is being proactive. Own the narrative. This is where the connection start and the communication start with your stakeholder. It's not about requests and answering the request. You need to be proactive, own the narrative, and lead your product or your company with your stakeholder by owning the narrative. This is the key on everything.
Absolutely. Thank you so much to our panelists for giving us a clear look on where the market stands and where opportunities are evolving. Thank you very much.
Thank you.
Allow me to present you with a certificate.
Right, thank you so much to our incredible speakers and to Ramia for that dynamic panel, ladies and gentlemen. Access to capital is key to driving growth and innovation in real estate. And on today's insights, they gave us a clearer picture of where the market is headed. Now, ladies and gentlemen, we'll explore the future of living where the fusion of AI and IoT is revolutionizing homes. To take us through this discussion, please welcome to the stage Abdelbasit Betrawi, a board member and partner at Land Sterling and CEO of Hutton Interiors, Ahmed El Shabini, CEO of Think Human, brand human communication consultants, and of course your moderator, Jada Shukri, content producer at Forbes Middle East.
Hello, hello. Okay, so you guys can hop on closer. The internet has done many wonderful things. It's allowed us access to information, it's allowed us to doom scroll on TikTok and Instagram, and it's also allowing us to make our homes a lot smarter, which is wonderful. Now our homes are capable of taking care of us. We're talking security, appliances, climate control, all of that is now easier because of the internet. So let's dive in and talk about the digital infrastructure. Mr. Betrawi, when we talk about embedding this infrastructure from the inception stage, how does it transform the life cycle and operational efficiency of smart homes?
Thank you for the question. I think we need to look at smart homes as a holistic approach to improving our lifestyle. So what you have these days is integration of technology from a design stage, so right in the beginning, and prior to that, from the brief of the intent, what the end user needs to get out from their asset or property, whether it's lifestyle goals, health goals, and that would then be adapted into the design, and having everything sort of speak to each other. This is done, you can say, through years of data collection, where you have IoT, and then the AI component, which comes in after, so it reads and adapts to how the end user uses the asset, and whether, to give you an example, some end users require more oxygen in a room, so you're pumping in more oxygen in a room. Some require different lighting settings. Some require light to be brighter in the mornings rather than the evenings, and vice versa. So I think we are becoming smarter as people in designing these things into our lifestyle. And we're seeing more of it in smart home technology.
It's very much a commodity. It's very much something that people are looking for. So how do we market it? How do we look at something like one development and think AI and IoT are now a product? How do you differentiate yourself when you're, in a competitive market, but you're offering a smart living option?
Well, it's very important usually when you look at the real estate industry, like any other brand, is basically your story, is the brand narrative. And I think everybody today and yesterday's sessions, everybody was talking about building, construction, connected communities, AI. And in the communication business as well, AI is really having a big impact as well, yes, with all the AI tools, the digital transformation that we've been talking about in the last few years. It's very important that we know more about our consumers and understand them better to be able to narrate a proper story. And I think what we have done with One Development as the consultants from 1 year ago is literally the differentiation aspect, which we were so happy to have a client with an open mind of what territory that they want to own. So leveraging on the positioning of the first AI real estate developer in the market was something that gave us a space that we can create content, design, visuals, and to have a story that we can own. By the end of the day, everybody is talking about quality, delivery dates, designs. That's a given in that industry. Because by the end of the day, it's owning a differentiating factor and creating that story and educating the consumers about it. And that's the role, I believe, of AI and technology, because now we have more data, we have more insights, we have more analytics about all the consumers that we deal with.
But I think also we can all agree that AI is still just starting out. The internet is only going to get faster. And when we talk about that, then we have to sort of reference scalability and digital adaptability. How do we sort of mitigate the technological retrofits during the design and consultation phases?
I think it's driven by the vision of the government as a priority. Alhamdulillah, I mean, we're in a country which is one of the biggest drivers globally for AI. So when you have this infrastructure in place, it allows the master developers and developers to look at existing assets as well as future assets, master communities, sub-communities, and so on. So when you have, again, it goes back to you have a clear vision, a clear brief, and what you want to get out of health and well-being. Ultimately, all of this is being done so that when we reach 60, 65, we're not all walking around with a bag of pills. And the idea is to how do we prevent health, bad health, and
it's not just longevity now, it's also the quality of life. You're wanting to live 61 but be really healthy.
100%. So you're looking at, again, better quality of air, better rest, understanding sleep patterns, sleep cycles, and what the human body needs in an environment to thrive. So AI is not just coming in as a perspective of, okay, how do I make your day-to-day better? But how do we extend life as well? So where you have an average, I don't know, people are living to what, 75? You might have 85, 95, 105, and so on down the line. So it's integrated into every aspect, and we're seeing it in every aspect. So we talk about it as buildings and lifestyle, but no, it's healthcare, it's infrastructure, it's education, and it's an end-to-end approach, and it's all moving forward as one holistic approach.
Absolutely, and it's really data-driven, and the more data we collect, the more it evolves. And this brings me to a very important thing that you mentioned. It's you need to keep educating the people as you go along. And when we talk about education, this now becomes, again, the marketer's job. How do you keep people up to date? How does this affect you when you have to advise people on, the benefits, the practicalities of living in an AI or like a smart home environment?
Again, it's all about understanding your consumers, and we're trying to get away from the normal day-to-day tactical offers that you have. Again, whether you're a real estate, an automotive brand, whatever industry you are, you have features that definitely have to communicate. And by the end of the day, the dollar sign and the commercial aspect is very important, of course. CFOs, the CEOs, and everybody will be looking at the bottom line by the end of the day. But again, sales and marketing, they have to work very closely together. And again, the marketing team's role is to make sure that they communicate, they educate, and facilitate the decision-making process to the consumer. Everybody's talking quality again, everybody's talking offers. It's not a matter of the beating of who's offering a better price. Again, you need to own a category, you need to own a territory where you're very confident, you have the product,
you have your
the
demographic.
Service. 100%, and you keep nailing that story, and you own that category, and then automatically you build that connection and trust and confidence with your consumers.
Now, this is again very new and a very nascent technology. So there's a technical element, there's naturally a cultural element, there's a regulation element. What's the biggest hurdle? How are we going to accelerate adoption, and what's sort of hindering that?
I think we're getting through the hurdles, to be honest with you, because the biggest hurdle is time and allowing the data to be collected to learn. So with IoT, a certain period of time has to go by to understand human behavior. So you're designing a system that works on intuition. And then you have to integrate that into a community. So I think we're past convincing people that this is a necessity. It's heading that way whether we like it or not. It's just whether you're on the train or not. And if you're not on the train, you can get left behind. So we're in a region where this is the future. Traveling around Europe, traveling around Asia, the US, and so on, I can say that the mentality that we have here far supersedes what is there. So we're not in our comfort zone, and we want to be drivers and leaders in AI. So conversations we're having with a lot of master developers as a asset management consultancy is how do we integrate this from the very beginning? And we're talking about, we're having discussions and putting budgets in at feasibility stage of how we can integrate AIoT into the conversation.
Yeah, your starting point is honestly happening at a very fortuitous time, because now AI is predictive. It can actually help boost you further. But now if we look at the next 5 to 10 years, how do you see the integration of AI and IoT in homes evolving over that period? What do you imagine is going to happen?
Well, that's a very challenging question. Things are evolving every day. I think, again, as everybody is saying, we have to adopt what's going on. We have to be very fast. We have to adjust. We have to be agile. Everything, there's in every single category and every single industry, there's a lot of technologies, tools, softwares, hardwares, and we have to learn, and we have to be flexible. I mean, by the end of the day, things will evolve. I think everything is now about the consumer's convenience, accessibility, ease of life. And again, from the design phase, the development phase, everything is happening from a very early stage. So again, from a communication perspective and marketeers, we have to consider all these factors from the beginning.
You've collected a lot of data already.
We need to have the access to the right data, speak to the consumers. So when we are requested to kind of launch brands or launch campaigns or companies, then we're ready with the right assets, tools, and data to adapt to whatever changes that are happening. But it's happening very fast.
I want to thank you so much. I'm excited for whatever the future holds, and honestly, I'm looking forward to my house just doing everything for me. Like, I just want to laze around, so this is good news for all. Thank you so much. You've been an amazing audience. Thank you so much to our panelists. The insights were invaluable.
Thank you so much.
Thank you.